Now I have to talk about people, because we already talked about so many other cool things. So I'm an economist, so I will talk about people, and I'm a social scientist, but I do work with people engaged in life sciences in the College of Agriculture, and also people with definitely a business culture within the College of Business with whom I collaborate. That's a courtesy joint appointment. My area of interest is finance, banking, agricultural finance, and also economic development and impact analysis, governance and efficiency of dual objective organizations. So I will talk about, instead of presenting one line of research, I'll try to tell you a lot of cool things that I think we do as researchers in social sciences. And I want to start by saying that to me, good research means that you have to love what you do. If you love your research, it's going to turn out good. So, and another principle I want to share before I start telling you more details is that I try to maintain focus on my research, but I also like to take some risks along the line, and they have paid off more times than not. So my area is really microfinance, and for those of you who may not have heard about microfinance, this is provision of financial services to marginalized clients while covering costs, and this is important. Why do I want to define that? First of all, why do we need special services, and why do we have marginalized clients? Well, we have low-income households, beginning entrepreneurs and farmers in developed countries. One example can be a barber shop. But we also have the poor all over the world, which are excluded from services of the formal financial system. So these are the target population of the microfinance institutions. Who are the poor? Because this is a women's oriented event. More women than men are poor, and women are poorer than men. So I was bound along the line to get into some of the gender issues in social sciences, although I never started with this as an intention. So one of the most interesting part of the research that I have done is how do you study efficiency? One of the questions was about costs. Which one is costly or more cost effective to use, right? So efficiency of these organizations is very important because remember, they have to serve the excluded, but they also have to cover their costs. That is the objective. So that is a dual objective of organizations. So how do you study efficiency of these institutions? Traditionally, you talk to economists, they see that, they see dollars, right? How do we achieve maximum profits? But when you have dual objective institutions, and let's think of it like university, say Auburn University with its 25,000 students and Alabama State with its 5,000, and a note here, I have no idea how colors in football operate, so I just learned that I might be wearing the wrong one, but that's okay. So these are different institutions. Should they both exist? Are they efficient? What is the efficient side? So essentially the questions that we answer is, do you want one institution to serve, to generate that many dollars in loans and savings, or do you want to have two of them, some serving a little bit and another institution serving a little bit more? So my and my collaborators' contribution was to start looking at the outreach mission and incorporate that into efficiency studies. And the results are when you find the optimal size, it's not necessarily the optimal size that you would predict if you look at volume of loans or volume of savings. You would overshoot more often than not. In other words, you tell the companies you have to reach economies of scales and commercialize and get bigger and bigger, but that will not be the case because you're measuring the wrong things. Remember, these institutions have to reach clients. That's the objective more so than generating loans. Within this efficiency analysis too, what's cost efficient, what's better to use, another question is, do you want these institutions to be loans only, where they'll provide only loans to those who need such financial services, or do you want to encourage savings and loans and insurance and education, all kinds of other services? In other words, other economies of scope is what we call. And I studied that because everybody is saying we need to commercialize the institutions, we need to make them like banks more. But then when you look at the scope economies, you find out that it is a good idea, but not everywhere. And not in every circumstances. I'll get back to that. And the final thing that affects efficiency of these institutions is obviously their governance structure and how they're governed. Within that area, I looked at the board, size and diversity, how boards affect dual objective institutions' performance. Okay, so the financial institutions and the environment. Turns out the efficiency is not impacted only by looking at inputs and outputs, which is the traditional model, but when you look at these institutions operating in such diverse environment, then you actually have to look into how that environment might be affecting efficiency of the institution. So in that sense, in that area, you look at regulations. Do you want to have them non-profit or for-profit? And if for-profit, then do you have them subject to banking regulation? And as I said, maintain your focus, but as you get into these issues, then you start realizing that the major event that happened while you were looking at your computer was the financial crisis, right? So then you start exploring how the financial crisis affects financial institutions that you study, and also how it impacts lenders and farmers, which is another area of my research. So, of course, once you start rolling out regulations, you end up with having unintended consequences for small banks, and I'll talk about that later when I mention the role of graduate students or my experience with them. Of course, the market forces, so your typical recommendation in economics would be the more competition among banks, the better, right? However, what happens in some of these poor countries is that you can get into over-indebtedness, which means that borrowers get a loan from one bank to repay the loan that they owe to another bank, because they may not be able to manage their money, or they may be in such a crunch that that's the only way that they can survive. So efficiency of these institutions is affected also on the level of competition in the local market. So there are many aspects. Then we also looked on independent ratings, and I see here a faculty from the finance department. So Dr. Barr and I looked at the independent ratings agency impact on banks, US banks we're talking about. And that was before the financial crisis, and we wanted to see whether rating agencies would have independent impact. In other words, would they play the market will they play a disciplining role on banks? And what we found is we didn't find that result. That was before anybody knew anything about rating agencies. It's still there. I looked it up. It's in our results. We didn't explain it in details, but we found it. So that's why I'm saying if you take risks, it could pay off. If we had emphasized that part, that might have been affecting the citations of the papers, right? Okay, so, and to tie in a little bit into what we've been talking here about climate and the life sciences, another aspect that affects efficiency of banks, and that's how my interest started, though, farm credit system institutions, these are cooperatives that serve the banks, serve the farmers and also agricultural banks. So what we looked about is weather variability and increase in weather variability as a result of climate change will be reflected somehow into the interaction between borrowers and lenders. So here is what we thought. So you have the yields in all kind of crops, and we looked at the southeast region, which is, as you saw from the previous slide, is very much affected by the trees, exactly where you had your trees. That's the region we studied. So yields are increasing constantly because we have technological innovation, right? But as you see, when you have a drought or flood or any other unusual climatic event, what you have is your yields drop. When your yields drop, what happens? You don't have cash to repay your loans. So those farmers don't like loans, but those who borrow a lot. So they're very leveraged. So if they cannot repay their loan, you would find out in their lenders, you will find up a little bit of blips of higher delinquency rates, right? Which is what we found. That's wonderful. However, banks are there to diversify risk. So you would say that's not a very interesting problem. That is true. Banks end up not having too much write-off, so the write-off are controllable in a good percentage, so not a big problem. However, what you can find is that both farmers and their lenders can benefit if they use the El Niño sudden oscillation and other climatic forecasts. In other words, both farmers and their lenders would know what the following year will be prior to planting. So when the predictions are announced, and that is sometimes late fall and early spring, you would already know roughly what the expectations for the following year is, whether you have droughts, whether you have floods, etc. So therefore, you can better plan, including how much insurance to buy for farmers, and for banks, what kind of diversification they will need should they ever need to improve their risk management. So that was something very cool, we thought, because very few people have looked at climate and banks. The banks are there to diversify risks, so you would think that there is nothing that you can find in there, but we did find. So what else economists do? Well, I started by looking at the impact of financial education. So the question that I asked is whether credit counseling leads to optimal mortgage loan termination. Let me take a step back. Essentially, there was a project for social scientists. We don't get that much money from independent agencies where we have a lot of freedom, but there was a project specific that asked, can we decrease default rates for borrowers if we provide credit counseling? And again, that was before the crisis, way before. So, and they had, the program was structured in such a way that you can do decent impact analysis without clearly establishing causality, right? So we were able to find that financial education and the particular credit counseling worked, but here is the risk that I encourage all graduate students to be taking. I said, okay, what about mortgage loan? It's not only about default. The banks also are interested in termination in terms of early prepayment. We've forgotten that, but a long time ago, if you prepay your loan earlier, you have to pay penalty, right? And that is because the banks were expecting for you to continuously pay and to have stable income, right? So what we found that this education not only helps borrowers manage better their cash flows and decrease their defaults, but they also helps them exercise optimal loan termination. In other words, terminate the loan, maybe refinance or sell the house whenever it makes financial sense to do that. And that was very cool. We used option theory, and we have in this room an expert in option theory, so I'm going to say only that. Okay, so that's the impact analysis, what applications we make. So financial education works for all of us who in education, that is a rewarding result to obtain. We also looked at microfinance and whether it has, what's the kind of impact that microfinance can have in the economy. So the question that I asked was whether it alleviates financing constraints of firms. In other words, you can say microfinance is a tricky subject to study because people want to use money to empower women or to increase incomes or to do some other things, improve education, maybe or maybe not. This is still to be studied, but what I wanted to answer is, does it do what financing generally is supposed to do, alleviate financing constraints? So I was able to come up with a model to study the impact on a country level. Previously, people just study one program, another, third, fourth, right? But on a country level, so for Bosnia, we found out that indeed there is impact. It helps alleviate financing constraints. And the rewarding part of research, that's why you do it, because there are a lot of rewards that you obtain. They're not in terms of money, but they're in terms of satisfaction. So what we found, and once it got published, then other people start applying it. And I'm sure my colleagues have experienced the same thing. When you have your method applied by another scientist, it's really wonderful. So people started applying it to other countries and were able to say something about the impact. And here is the interesting slide. I started studying microfinance, so I was bound to get to this topic more or less. So what we have here is, you probably recognize these women, as you certainly recognize Janet Yellen, who is the chairwoman of the Federal Reserve, right? That's probably the most powerful position after the president of the US. It's an independent institution that is in charge of our monetary policy. So it happened a few years ago. She was confirmed in 2014, right? So I asked a question. are women better bankers to the poor in microfinance area? Because I saw what was going on in the real world while I was doing my research again in front of the computer. And the real world had a lot of, I was surprised to find that many central bankers. And these are not very small and unknown countries. You have Malaysia, you have Argentina, you have Israel, you have Russia, you have Ecuador, you had a lot of countries whose central bankers are women. So women are not worse than men. Proportionally, probably still not enough, but we already, and what attracted my attention there is some strange things that I found as I was studying the clients of microfinance institutions, the way women manage their money, the way they take risks, the way they do due diligence on the boards. So all these characteristics, of course, were attractive, interesting to see if they will result in efficiency improvements ultimately. So of course we also have the first economist who won the Nobel Prize in economics. That's Elena Lundstrom, and we have of course Christine Lagarde, the managing director of International Monetary Fund. Sorry. So this is it. So there's some women in banking. Are they able to do as well as the men in banking was the question that I asked. Of course, I wrote it in a very provocative theme, but way, but that's what we asked. And we did find that in rural, in particular, rural areas, microfinance institutions that are led by women have 12% higher efficiency, operate a little bit more efficient. That might be because they know their clients better. We are not asking any of these questions, we're not making any case other than it is probably important to encourage the development of pool, as the business people call it, women in the pipeline, right? And that is what we're doing here, in my opinion, trying to encourage the young people here to come and women to do scientific career, because science is so cool. Especially the one not about people. I almost regret that I'm an economist now. Okay, what else has worked for me is to seek collaboration with industry partners, with AU researchers, and to support the ideas of graduate students. I imagine that there are quite a few graduate students here. So I have to tell you, it's been very rewarding, at least in social sciences, you don't necessarily have graduate students working on ABCD. You allow them a little bit of freedom so that they can explore an area and come up with a study that is satisfactory to them, and you also help them develop that area. So within this, I'm not going to go through all of them. I just want to say this one. My student, she typically, when you look at credit derivatives, and again, we have specialists here better than me, in banks, you use that for risk management purposes, right? So she said, well, okay, that's fine, but I want to see if that affects performance of banks, in other words, profitability. So, and what she wanted to study is how small banks in particular, agricultural banks, but also small community banks, which are banks less than 1 billion, which is, I don't know what your definition of small is. Now they changed it to 2 billion in assets, right? So she was able to find out that because of the Dodd-Frank proposition that limited severely credit derivative use by small banks are going to suffer because it's very expensive for them essentially to engage in alternative risk management methods, and they are losing one important one. And if they want to use it, they have to pay a lot to increase their costs. So that was very rewarding, because I would not have looked at this topic without her. So that is, and then of course the climate change, and maybe for this audience, there's another student that is really interested in women's property rights and how that affects microfinance outreach. Okay, collaboration is very important in research. It has been to me, at least. I try to approach various researchers from all over the country, but also the world. As you heard, my education is from different countries. But my experience, my field work and collaborators come from different set of countries, and they do not overlap. So what that means is that it doesn't matter who you are, it doesn't matter where you come from. To me, at least, that's what it means. It means if you do your best and you do good research, you are going to end up with opportunities all over the world. So the limit is really the world in terms of where you find the scientists that are within your areas. And conclusion, I really think research is exciting. If you find research exciting, you should be a scientist. And when you do your science, take some risks, collaborate, find the people you need for your research in order to succeed. I was very, I was the beneficiary of my support for sometimes crazy ideas of my graduate students. And finally, of course, you'll get occasional lemon, but make a lemonade and go back to one. Research is exciting. So I guess that reminder for lemonade might be a nice way to conclude, which is ahead of us, I imagine.
Yes.